Welcome back. JP Morgan CEO Jamie Dimon warning at a banking industry conference that inflation could prove stickier than many think, but nonetheless softening his tone a bit on the American economy, saying it's been, quote, kind of booming, and it's still booming, and consumers are still doing fine. And my next guest is also optimistic and says strong holiday spending could catalyze softline retailers in particular, including on holding. That was our mystery chart. Shout out to 10X and IWC Capital for guessing it right. I think 10X edged him out on both of them by a minute or two. These guys are always neck and neck. Joining me with his holiday outlook and opportunities in retail, Jay Sole is a retail analyst at UBS. Jay, welcome to you. And on feels so consensus that you wonder at what point it goes the way of Lulu, but I guess there's years left to go for now.
Well, Kelly, what I would say is that if you look at the long history of softline stocks, the ones that outperform most frequently are the growth stocks. So if you pick a growth stock and it actually delivers the growth that you're expecting, chances are you're going to outperform a lot of other names. So basically, even though ON is getting more popular, we think there's still a lot of room for that stock price to increase.
Yeah, or to quote Ari Wald from Top of the Hour, you know, when you've got your winners, you sit on them, you stick with them. And I don't own a pair yet, so clearly it hasn't topped. I always buy it right when the moment has passed. How much, I don't know if you want to talk about how much more upside for ON or where else you think, Jay, there might be some kind of less widely known names that could really do nicely in this period of time between now and Christmas.
Well, Kelly, we think there's a lot of upside for ON. If you want another stock idea, it's Deckers. Deckers is a company that owns two brands. One is called Hoka, as in the Hoka running shoes, and the other one is UGG, which everybody knows is a great holiday gift every year, UGG boots. And both Hoka and ON are benefiting from the fact that Nike's in a little bit of a retrenchment mode. Nike's a great brand with great history, but struggling a little bit like right now, giving up some market share. ON and Hoka are the two brands really benefiting the most from that market share gain. And that's really what's driving those two stocks. And we think it's going to continue for both.
What about Adidas? Should we not count them out? I mean, I see all these buzzy new partnerships they're announcing.
Well, Kelly, we don't cover Adidas. That's covered by out of London for UBS. Adidas has definitely had a strong comeback story. But even with that, the two stocks that we've been focusing on are ON and Deckers. And if you want a third, it's Skechers. Skechers is a growth stock with a low valuation PE. We think Skechers is a really underappreciated story.
All right, kind of shaking off some of those China issues from earlier in the year, too. The shares are still down about 1% year to date, so it might be a bit more value there if you're right. What about the consumer overall? What are the data points that tell you that spending you think is going to be, how would you describe it, relatively strong, quite strong?
We think it's going to be pretty strong. We think that the overall holiday spending season will drive about 3% growth for the industry, which is important because last year was pretty strong. So 3% to a new all-time high, we think is pretty meaningful. And it's coming in three areas. Number one is that consumers are telling us in our market research that they plan on buying a lot of gifts for their friends and family. That's great. Number two, they also want it to be very festive. So the amount they plan on spending on decorations, cards, things to make the holiday more special is also up significantly. And then the third trend is self-gifting. That's been a good trend. This year, people are saying, hey, when they're out shopping for their friends, they're also going to pick up something for themselves. All those three things together, we think are going to make for a really nice holiday season.
Self-gifting always makes me. I think it's sort of like shopping can be kind of hard for people to get around to. So all of a sudden, if you're there and you think I need things and then they need things and so forth, there's a tug of war between going on with inflation, isn't there? Because as it moderates, that means that the top line's going to get more challenging for retailers, especially year over year. So you're kind of hoping that the price breaks for the consumer are enough to drive, real incremental buying activity that's enough to still push the needle higher.
Well, Kelly, that's the key. And what consumers are telling us in the market research that we see is that they're seeing less inflation year over year and even less inflation versus what they saw in the summer. And that's giving them more confidence to go out there and spend. And at the same time, consumers have been, trying to reduce debt on their balance sheets, pay off credit card debt and, increase savings a little bit as they saw inflation rising. But now they're saying, hey, because inflation isn't as bad as it was, and I've actually saved some money, I have paid out some credit card debt, I'm ready to go have a big holiday season. We think that's good for retail.
All right. Jay, thanks for joining us. Appreciate your time. And by the way, is it a shorter period than usual this year or is it longer? Last year it was long and this year it was short. How does it work?
Right. There's about 5 fewer days between Thanksgiving and Christmas this year. But remember, there's still 30 days in November. There's still 31 days in December. And what we know from our research is that people are saying they started shopping earlier this year. So we don't think that shorter time period between Thanksgiving and Christmas is really that big of an issue.
All right. Thank you for clarifying. Jay Sole, we appreciate your time.